Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news we're likely to get a lesson this week, reconfirming that equity markets all look for short-term profit hits and are now setting prices on these short-term factors. But bond markets are much more focused on risks 10 to 30 years ahead, and their signals are diverging markedly. This coming week, however, will largely feature reactions to last week's big events, the US Fed's positioning and rate cut, and the awful New Zealand second quarter 2025 GDP data. Here we'll be watching for more fallout from that after the New Zealand dollar got marked down sharply. Will markets assess that the June result will be repeated in the third quarter? After all, we're now only 9 days from the end of the third quarter, and the appearance of better data has been sparse, and perhaps only in the last week or so. And on Thursday, we'll get an update of household net worth, but it will be year-old data. Much more current will be Thursday's result announcement from Fonterra. In Australia, they'll also release household net worth data on Friday, but for March this year, and they will get PMI updates as well. Globally, the focus will briefly turn to New York for what is expected to be a turbulent moment for the UN, with the US already barring some leaders from attending. New York's time as the home of the General Assembly may be coming to an end. But economically, there'll be many PMI updates out this week. The US will release its PCE data and another second quarter GDP update, and Fed speakers will be out giving context to last week's rate cut decision. Switzerland and Sweden will be among those reviewing their policy rates, and later today China will review its loan prime rates, although no change is expected. China released its August year-to-date foreign direct investment data over the weekend. They said they only attracted 507 billion yuan in net foreign investment in those 8 months. They said they attracted 467 billion in the 7 months to July. So that means they gained a net 39 billion in August alone, and that is very low, just $5.5 billion US, and it's only 1/3 of what they got in August 2024. Basically, foreign direct investment into China from all sources is close to dead in the water. This doesn't mean that China's economic expansion won't be good for 2025, over 5%, but it does point out how the two big powers are isolating themselves, with cross-border investment and economic connections all retreating. A recent example is that China's new iron ore buying monopoly has moved to shut out a key Australian blend from BHP. They have other options and using their heft to try and bring BHP and Australia into line. Separately, Japan's inflation eased to 2.7% in August from 3.1% in July, the level since October 2024. There was a notable slowing in the rise of rice prices, enabling food inflation to ease to only 7.2% in August from a year ago. Overall, prices are up 0.8% in the month, with food prices up just 0.3% for the month. Japan's central bank announced the results of its policy rate review late on Friday, and as expected, it left it unchanged at 0.5%. This came amid political uncertainty around the resignation of Prime Minister Ishiba. But they also said that it will sell holdings in exchange-traded funds and Japan's real estate investment trusts to the market. Germany said its producer prices fell an outsized 2.2% in August from a year ago, a deflation sign they will not welcome, and extends their deflationary pressure that started in July 2023. But most of that is coming from the lower cost of imported energy, with local producer prices basically unchanged there. And Canada said its retail sales rose 1%, more than offsetting its July dip, but it isn't clear how much of that is inflation-related. But financial markets reacted positively, seeing consumer resilience in the data. The US Treasury 10-year yield is now at 4.14%, up 1 basis point from Saturday to be up 7 basis points for the week. And the price of gold will start today at $3,684 an ounce, up $3 from Saturday. That is up $36 from a week ago. And silver had another spurt over the weekend, now up over $43 an ounce, a weekly gain of $1. And American oil prices a little change at just over $62.50 a barrel, while the international Brent price is just over $66.50 a barrel. And the Kiwi dollar is now just under 58.6 US cents, unchanged from Saturday, although down a full cent from a week ago. Against the Aussie, we're just under 88.9 Australian cents. Against the euro, we're still at 49.9 euro cents. That all means our trade-weighted index starts today at just over 65.8, unchanged from Saturday, but down 100 basis points for the week. And the Bitcoin price starts today at $115,509, with very little change from Saturday. Volatility over the past 24 hours has been very low, at just under plus or minus 0.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.